Hey everybody, it's Mike Jones, your VA mortgage advisor at Neo Home Loans. And in this video, I want to walk you through the pros and cons of using a VA cash out refinance to access your home equity. Now, cash out refinances allow homeowners to restructure their mortgage terms while at the same time pulling cash out from their home equity. There are a lot of cash out refinance programs out there available to almost any homeowner who has equity in their home. But VA cash out refinances are a bit different, and that's what we're going to talk about. One of the biggest pros of a VA cash out refinance is the ability to pay off bad debt and replace it with good debt. Now, when we're talking about bad debt, we're talking about things like credit cards, car loans, or personal lines of credit. And this is because these types of debts typically have a much higher interest rate and can be a huge burden on your personal finances. But something like a mortgage is considered a good debt because it's secured by an asset, in this case your home, that will increase in equity or value. Now, by using a VA cash out refinance to essentially roll these debts into your new mortgage, you'll not only save money on interest, you will also reduce your monthly expenses. Another benefit of a VA cash out refinance is the lower rates. See, the rate on your mortgage is always going to be much lower than almost all other consumer debt you have. But one of the best things about a VA cash out refinance is the VA interest rate is going to be typically lower than what you would have on a conventional or traditional mortgage. We work with a lot of veterans who have in the past taken out other types of home loans, whether it was a purchase or a refinance that wasn't a VA loan. But by refinancing and using their VA loan, they were able to get a lower rate than their previous mortgage and save even more money by reducing their loan amount and getting rid of the private mortgage insurance. Next, accessing your equity with the VA cash out refinance will give you more cash to have on hand for emergencies and large expenses. See, unexpected expenses come up all the time. And if you don't have an emergency fund set up to handle things like home repairs, large medical expenses, or something like a job layoff or other loss of income, taking equity out of your home now and setting it in a cash position can give you some huge peace of mind and make it so you don't have to get into more bad debt if one of those situations comes up. And the last big pro I want to talk about is the ability to access up to 100% of your home equity. This is a great benefit that's unique to VA home loans because most conventional cash out refinances will cap you or limit you to withdrawing only up to 80% of the value of your home. And they usually come with some form of restrictions. Using a VA cash out refinance puts you in control and makes it easy to access as much equity as you need from your home. Now, while a VA cash out refinance can be a great option to access your home equity, to lower your other debt and maybe reduce your interest, it does come with some downsides compared to just staying in your current mortgage. First, you will have closing costs whenever you do a mortgage loan. Closing costs are part of every mortgage, whether it's a purchase or a refinance transaction. But with a VA cash out refinance, you will typically also have to pay a VA funding fee, just like you did if you used your VA to purchase your home. Now, this funding fee depends on whether you've used your loan before, whether you have a service-connected disability, but you do have the option to finance that into your loan and pay it over time. That's just something you need to be aware of. Another potential downside to a VA cash out refinance is that your mortgage payment could go up. Now, this would only happen if either your rate or your loan amount increased compared to your current loan. This all depends on what your current rate is, what rates are when you refinance, and how much cash you're going to take out. But keep in mind that even though your mortgage payment could go up, you might still be saving money because your expenses are going to go down by paying off other debts you had at higher monthly amounts. Now, if you're able to completely get rid of those payments, you could actually end up saving money every single month, even if your mortgage payment does go up by a little bit. Using a VA cash out refinance can be a great option, but it's not right for every veteran in every situation. And it's important that you do it the right way. You always want to make sure you're working with a VA mortgage advisor who will help you figure out your goals and spend time walking you through a full cost benefit analysis so you can know that you're making the best decision for you and your finances. If you want to explore your options for a VA cash out refinance, head to our website at vahomeloansolutions.com to request a consultation. I'll personally meet with you to walk you through the process, help you figure out your goals, and make sure we put together a mortgage strategy that makes the most sense for you.